What's up, guys? I'm going to be walking you through a trade I took for the FOMC. Most traders panic on these days, but I had my levels pre-planned thanks to the indicator. It had identified the supply zone up at that 69.49, where coming into the rate decision, I decided that I was going to look for a short and try to take it to its PTs. First one, of course, was going to be that 69.17, and then the final target up down to that 69.01. So before the rate decision, I looked at the R&R. It was over a 2R for the final target. So I looked for a pump up. As soon as the pump up came, I got into that level. As soon as it was confirming, I scaled in and got my average down to 69.39. And with targets of 69.17 and 69.01 would have stopped just above that supply zone. So you can see this is called systematic trading. You're not guessing whether the Fed is going to be hawkish or bullish. You're just having your pre-identified levels and your price targets. And you're going to see how this trade executed for me today and how it was such a great day for me in P&L wise. I did also take SPX puts earlier just before when we reclaimed that level. So this was just adding on to the short thesis that we were going to go get these levels below. So as you can see what happens next, my stop is just above the supply. Price rejects it. I got my first trim at the first supply zone, scaled right out of it, and then got my final price target. And that's where I was down to my last contract. Price continued to drop after the price target hit. And I'm just down to my last runner. So I didn't move up my stop until we got past the next supply zone lower. As you're going to see, this is how I trail my winners. I did this with also my SPX contracts. I didn't move my stops on the runners until we got back below that next supply. That way I know I can confirm that, hey, I don't want to see it pass below that level. And you're going to start seeing me now drag as soon as we get right below that supply zone. I start to drag my stop. Now we can do the math. My average was at 69.39. My first target was 69.17. So that's 22 points on that part of the position. And then my other final target was 69.01. That's 38 points. And then my final runner, you're going to see it got stopped out at 68.91. So that's 48 points on my last contract. I scaled my entry, I scaled my exits. This is systematic risk management. This is how you trade high volatility events. So why did this work when most traders were scrambling for FOMC? First, pre-planned levels. Second, scaling in and out. Third, systematic approach. The indicator identified that supply zone for me at 69.49. It gave me a clear price target at 69.01. I executed the plan with defined risk. This is the difference between systematic trading and gambling. FOMC is usually one of our highest volatility events every quarter, every month. But pre-identified supply demand zones remove all emotions and give you a clear game plan. This is what I do every single day. I identify these levels, wait for confirmation, execute with a defined risk, scale in, scale out, and manage my trades. If you want the indicator that plotted these levels for me for FOMC, link is in the description. If you want to learn how the complete supply and demand methodology and how I identify these zones and manage these trades, the Vault teaches this step by step, and that's in the description as well. This was one trade on one volatile day, but it shows exactly how the system works under pressure. Thanks for watching, and I'll see you guys on the next one.